Hey, this is the Stock Doc. I've got the CEO of Endeavor, and you're the chairman of Canark Resource Corp, correct?
That's correct.
Brad, thanks for taking a call with me. We've been talking a little bit through email, and we're able to get together. Purpose of this interview is to talk a little bit about Endeavor Silver Corp. Ticker symbol is EXK. And before we go any further, I just want to point out this is not a buy or sell recommendation interview. I am not a financial advisor. You should consider speaking with yours before making any financial investment decisions. This is an interview. Just simply speak with the CEO of Endeavor Silver and hear what he has to say. So let's get started. Probably the number one question on most people's minds, which is what is going on with gold and silver prices, and why are we trending lower? Why are we finding these prices here? And what's it going to take for things to turn around?
Well, thanks for your question, Ty. Clearly, gold and silver have had quite a volatile year, starting off at what we thought was then a new low, and then having not one but two very robust rebounds up. In the case of silver, almost to $21 per ounce. In the case of gold, almost to $1,400 per ounce. And so most people thought, well, that was the end of the down cycle and the start of the next up leg for the precious metals. Clearly, that's not what happened in the last few weeks. September through March is usually a period of seasonal strength for the precious metals because of physical demand, uh, primarily for jewelry out of the Far East. And we haven't seen that this year. In fact, we've seen the opposite. And I think we can point to nothing more than the strength of the U.S. dollar to explain why gold, silver, and other commodities like oil have really hit the skids since July, August. Um, so if you look at a U.S. dollar index chart, it basically takes off in July and goes straight through the roof. Um, is that sustainable? Well, clearly, the U.S. economy and U.S. equities appear to be the only place for global cash to park their money and make a return worldwide. There's no signs of economic growth yet in Europe. There's no sense of a rebound in China. So it's hard to find a short-term reason for the dollar not to go higher and the U.S. equities not to go higher, which is bad news for gold and silver short-term. So what do I think about the next few months? I think we'll probably see a test of some new lows for gold and silver. Not big drops, but probably below $1,100 for gold briefly and below $15 for silver briefly. Um, and if we do see that, especially if it's a very short, volatile spike down capitulation, then I would take that to be the bottom of this particular down cycle for gold and silver. I am bullish. I think that there could be quite a rebound next year, and we just have to see this short-term pain put in before the industry can see a turnaround of metal prices. Um, so that's my short-term outlook. Long-term, I can tell you that $1,100 gold and $15 silver is not sustainable for mining companies. The all-in costs to build and run a business are higher than those prices, and so either we see companies and mines shut down, which I doubt, to be honest, other than small ones, um, or we see the metal markets turn around because of a resumption of demand. So I'm looking quite optimistically at the last half of next year.
Well, thanks for answering that question, and you brought up a good point there. As far as the prices of silver dropping down, that's going to hurt the ability to produce some of these mines. But what's Endeavor doing to reduce their costs and to make sure that that isn't the case?
Of course, we had a similar crash in metal prices in the spring of 2013, and like every other company, we looked to where the fat was. And in 2013, Endeavor laid off, I think, 440 people from our newly acquired El Cubo mine. Um, that was pretty obvious and easy to do, and it had long-term savings for us in terms of our overall cost structure. This time around, these last 2-3 months, we pretty much have to do 10 things to achieve the same cost-cutting levels as the layoffs in 2013. And so we are optimizing our operations at each of the three mine sites. And we do expect a strong fourth quarter, based on those optimization programs. But it's no longer one simple thing like layoffs. It's a little bit of a layoff here, It's getting better productivity underground there, trying to improve our grades by 5%, trying to improve our recoveries by 2%. And then you look at that collectively, and it gets your overall cost down significantly. That's what we're doing.
So these are numbers that you've taken a long, hard look at already, and kind of have a roadmap to success already in front of you.
Oh, yes, absolutely. As an operating group, have a pretty good idea of what we can defer in terms of discretionary spending. For instance, we're in a cyclic business, and whenever you're into the up part of the cycle, it's always good to invest more money on what we call discretionary investments. That would be exploration to find new ore bodies, development to develop them into mines. And at the downside of the cycle, like today, you obviously spend a lot less on exploration and mine development and focus only on minimizing your costs and maintaining your profit margin. And that is clearly our short-term focus at Endeavour, as with every other company in the silver space.
So we've covered a little bit about precious metal prices and the forecast short and long term in general. Talk to me more about Endeavour and what the short and long term plans are for the company.
Well, we've had a pretty good year. Excuse me. Our first mine, Guanaceví, is on track for a record year. It's been producing for 10 years, and the 10th year is the best yet. So that's very good news. Guanaceví really contributed to our bottom line this year. We also, partly due to Guanaceví, also due to our second mine, Bolañitos, were able to add almost $15 million to our balance sheet in the first half of the year alone. That is the definition of free cash flow. Cash that comes from the operations and goes straight into the treasury. I like that. So we had a great first half. We did spend some of that cash in the second half on longer-term exploration and development, and that spending has now been significantly reduced here in recent weeks due to the lower prices. What else have we got coming? Probably the most exciting thing for us is the emergence of our new San Sebastian discovery in Mexico. It's a new high-grade underground silver-gold vein deposit that we found from scratch 2 years ago. We just got our permit, our mine development permit from the Mexican government in late October. And we'll be going to the board with our in-house economic study, the in-house mine plan, and the updated reserve and resources to consider what the next step is, probably a more detailed economic study. And so looking to next year, San Sebastian will generate a news release on the new resources, probably in January, February. We'll be looking at publishing an economic study in the second quarter. And with luck, there's no certainty yet, but with luck, we'll go to the board in the second quarter to make a decision about building what looks like could be our fourth mine.
Excellent. Yeah, that would be exciting news. And
we're always looking for what's next.
And so on that track, are there any acquisition targets that are already operating that would not require the same as it was San Sebastian? Is that the name of the property?
Yeah, San Sebastian, which we think about it, we acquired San Sebastian in 2010 as an option to purchase from another larger company, and they had not set foot on the property for decades.
Mm-hmm.
San Sebastian was a historic district of 50 old mines on 20 some odd ore-bearing vein structures, but really all those mines shut down in the Mexican Revolution 100 years ago, and literally nothing happened ever since. We liked the exploration potential at San Sebastian. We took an option to purchase on it in 2010, started drilling in 2011. We're disappointed in the results, did a little bit of soul searching, granted our VP of exploration another budget to drill other areas in 2012, and that's when we made the discovery. That discovery is now big enough and rich enough that we're pushing it ahead to a production decision. And the all-in purchase price for the property was $2.75 million. We've spent just under $10 million exploring and developing to date. So we're in for what? Call it 12 or 13 million. We've got 40 million ounces of silver equivalent resource, and we think it could double or triple. That's pretty good cost of discovery. You're talking about pennies on the dollar, pennies on the ounce in terms of our cost of discovery.
Well, absolutely. So that would make my number four for you. Do you have any other targets for acquisition for 2014 or 2015?
We are trying to be acquisitive in this market, and again, the concept is not only that we like to try and grow by acquisition as well as discovery, but in times when the precious metal cycle is down, um, these are times when more opportunities come available and they have cheaper prices. So as a company, we buy into the philosophy of buy low, sell high, and we are trying to buy low during this down cycle.
Okay. Well, that answers my questions here at this point. If you want, just give you a few minutes so you could say anything that you'd like to shareholders that are listening or other people that are performing due diligence, and just kind of share any other thoughts that you have at the moment.
Well, as a shareholder myself, this is a pretty tough time. People start questioning their investments and their own philosophy because the stocks just seem to keep on going down and down and down since July, August. For instance, Endeavor, believe it or not, posted its 52-week high in August and its 52-week low in early November. So that round trip was barely 2 months.
Mm-hmm.
That's hard to take for a lot of people, including myself. I'm a significant investor of Endeavor. And you just have to focus on the longer term and make sure that the ingredients for success are still there and haven't disappeared. So, question number one, can a company survive low prices? I think we've been able to answer that with some very robust low costs in the earlier this year, and we hope to be back there in Q4. Does the company have growth prospects? Well, clearly we do at San Sebastian. And can the company take advantage of the opportunities that come out during a downturn like this? And while we haven't pulled anything out of our hat yet, we're certainly trying to. So we look at this as tough medicine short term, but very healthy for our business long term.
And I can personally say that having known you for several years now, I can't remember when we first started speaking. This isn't the first time that we've been in a market such as this, and surprisingly enough, Endeavor has posted profits in quarters several times over in a down market. So personally, I trust everything that you're saying. That Q4 could be a lot different than Q3, and I understand the reasons for Q3. And I appreciate you answering all the questions that you have.
Tom, it was great to talk to you again.
Yeah, it's great talking with you. And again, we've been talking with Brad Cooke, who is the CEO of Endeavor Silver Corp. Ticker symbol is EXK, and appreciate you listening.